The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Good afternoon. We're getting right down to business here. Yep, we're doing it live, doing more at 4 weekday afternoons, right after the Guy Benson Show at 3 and just before the 790 KBC News Blitz with Randy Wang. Motec on Money, live on the air, 790 KBC, streaming live online worldwide at KBC.com and the on-demand Motec on Money podcast, KBC.com, Apple iTunes, YouTube, all your favorite podcast platforms. Stocks rallying today, cryptos, including Bitcoin and Ethereum, rebounding, gold and silver having a good day today. NVIDIA shares in the spotlight after hours after the AI chip giant reported record sales and income in its earnings report this afternoon. Fourth quarter sales at NVIDIA coming in at $68.1 billion, beating the $66.1 billion most analysts were expecting. Looks like NVIDIA raised its sales guidance for the quarter to $65 billion back in November and blew that out of the park. Revenue in all the data center division, the all-important data center division, surged 75% to $62.3 billion. So NVIDIA stock in the spotlight here this afternoon. And NVIDIA shares today had already closed up nearly $5. Let's see. NVIDIA, we got to pull up the latest quote in NVIDIA here. We'll have that for you in just a second. Hewlett-Packard also in the spotlight with the computer maker's quarterly earnings topping analysts' expectations. Hewlett-Packard warning its annual results would be near the low end of its previous guidance, partly due to rising memory chip costs. Overall, stocks did move higher today, with the tech names leading a second straight day of gains following Monday's washout. Investors positioning themselves ahead of NVIDIA's earnings news, which came out this afternoon. The Dow coming in for a closing gain of 308 points, settling at 49,482. The S&P 500 gained 56 at 6,946. And the NASDAQ gained 288 points to 23,152. The volatility index pulling back today by 8%. The yield in the 10-year note now at 4.04%. The price of gold pulling back a bit right now, down about $35 at $5,191 and change. We are watching the price of silver, too. Kissed above $90 today, down $1.67 right now at $89.96 an ounce. Taking a look at the price of oil, as tensions continue to run hot in the Middle East, we see oil at the moment hovering just below $66 a barrel. Of course, the Middle East and the economy, all big topics of discussion last night by President Trump in his lengthy State of the Union speech. It was a record-long speech for State of the Union speeches. The tech rebound, by the way, in the past couple of days has repaired some of the damage inflicted at the start of the week after a viral research report raised fears about AI's disruption of legacy software businesses and sent stocks pulling back big. On Monday, we saw the Dow plunge more than 800 points. Software names that sold off sharply then have been staging recovery. Salesforce did build on yesterday's gains, adding about 3.5% ahead of its own earnings news, while Cloudflare and Zscaler each gained more than 4%. And IBM, which took that big hit yesterday, rebounding today by more than $8 at $236 and change. Oracle also climbing for the second straight day after being hit on Monday. Looks like despite this two-day recovery we've seen this week, the S&P 500 is up less than 2% for the year. Of course, it's pretty ugly for the cryptos, and we hope to get into that on that front very shortly. Today's trading day also highlighting the unresolved anxiety underneath the tech rally. Workday shares tumbling as much as nearly 10% after issuing weaker than expected guidance and briefly reignited fears about artificial intelligence competition, hitting enterprise software demand. Before that, stock clawed back its losses, and Workday actually closed the day higher after that news came out yesterday, and we saw that big drop in after-hours trading. And at the start today, by the end of the trading session today, Workday shares had actually moved up about 2%. Now, during the State of the Union speech last night, the president defended his trade and tariff strategy even though the Supreme Court ruled on Friday that he had violated federal law by using emergency authority to impose his tariffs. As the president entered the House chamber, he greeted the justices who ruled against him before later criticizing the decision from the podium. The president's words, he said, despite the disappointing ruling, these powerful countries it's saving our country the kind of money we're taking in. The High Court's decision on Friday forced the administration to shift strategies and come up with some sort of a different legal authority. The president's new tariff approach, a 10% global tariff for the time being, went into effect yesterday, despite saying over the weekend it would be 15% effective immediately. Coming up later this hour, I'll be discussing the fallout from the Supreme Court ruling and what's next for tariffs and more with economist Christopher Thornberg, principal at Beacon Economics, based right here in Los Angeles. A local prominent economist, Christopher Thornberg, will be joining us live to talk more about that as well as the overall economy. Silver still shining brightly this year. It's outpaced gains for gold so far this year and looks to be the hedging asset of choice for investors. That's one assessment we're hearing today from a senior market analyst at XS.com. Looks like the price of silver set to notch a 10th straight monthly gain. That's the longest such streak on record. One of their analysts said trade escalation typically revives investor appetite for hedging assets, particularly in a global environment marked by slowing growth and rising geopolitical polarization. Right now, silver is hovering just below $90 an ounce. Gold, meanwhile, just below $5,200 an ounce. In case you missed yesterday's Motac on Money, you can bring it up on the podcast at kbc.com. All the podcasts are right there on that website. And we had Axel Merck, President and Chief Investment Officer at Merck Investments, on this program where we discussed at length gold and silver. The homes and office of the head of one of the largest employers in Los Angeles County, as you heard at the top of the hour, were raided today by federal agents. LA Unified School District Superintendent Alberto Carvalho, who heads up the second largest school district in the United States, and a knock on the door by the FBI today. The FBI agents executed search warrants at his San Pedro home and downtown office of the LAUSD Superintendent Alberto Carvalho today. Federal authorities confirming warrants were judicially approved but have not yet disclosed the specific nature or target of the investigation. The KABC News Department is on that big story, and we'll have updates as we get them here. In the business of show business, Paramount Skydance's new management team today said that while their turnaround plan is proceeding, a potential acquisition of Warner Brothers Discovery would be an accelerant for transforming the business. According to the Wall Street Journal, Paramount's new CEO David Ellison, who led the takeover of the media conglomerate last fall and quickly turned his sights on acquiring the much larger Warner Brothers Discovery, said he sees both moves as part of a greater effort to build the media company of the future. In all this, Warner Brothers Discovery stock today closed down 25 cents at $28.90. Netflix shares up nearly $5 at $82.70. Will Netflix be left at the altar? That remains to be seen. Paramount Skydance shares closed down 23 cents today at $10.16. Oracle up today to $147.89. The Los Angeles County Economic Development Corporation, the LAEDC, convening hundreds of leaders today, business and civic leaders, at the Glendale Community College for the release of the 2026 annual LAEDC Economic Forecast. This is always a big event on the local economy. A lot of businesses and government entities base their moves for the year on that forecast, which came out this morning. That forecast, by the way, marked more than 20 years of delivering economic insights to the region. And coming up later this hour, I'll be speaking live to Stephen Cheung, the president and CEO of the Los Angeles County Economic Development Corporation, the LAEDC. He's also the head of the World Trade Center, Los Angeles, and, of course, want to get his reaction to what's happening on the trade and tariffs front. Today, that meeting was held under the theme From Disruption to Direction. That big forecast event today examined how Los Angeles County got through the year, marked by the horrific fires last year, global trade volatility, immigration enforcement, and supply chain disruption, and why the regional economy continues to grow despite these pressures. Taking another look at what's happening with the cryptos here now, we did see a pretty decent rebound with Bitcoin approaching 70,000 today. Yep, you heard me. It's closer to 60,000 earlier in the week. Now Bitcoin approaching 70,000 as risk appetite returns. Bitcoin approaching the 70K level. snapping a 3-session losing streak, as stocks also posted modest gains today and broader risk sentiment improved with NVIDIA's earnings report, which came out after the closing bell. Bitcoin climbing as much as, a little over 9% to 69,987, marking its biggest intraday gain since earlier this month as tech names led the tentative rebound across risk assets. According to Bloomberg now, the bellwether digital asset last reached 70,000 back on February 16th. Ethereum also moving higher, up about 13%, getting up to around 2,100. It's just shy of 2,100 here at the moment. According to the co-founder of Orbit Markets, the move higher likely reflects some dip buying behavior after the extended sell-off, adding that Bitcoin reaching 70,000 would shift the narrative. A modest relief rally took hold after the State of the Union speech from the president last night. And NVIDIA, which is taking the spotlight here this afternoon on its earnings news, is seen as the barometer for the AI-fueled trade, giving a bullish quarterly revenue forecast, signaling that the build-out of AI computing remains on track. Bloomberg also notes an initial uptick to cryptocurrencies coming alongside a rise in equities as the president defended his economic agenda. A Supreme Court decision invalidating his ability to use emergency powers to impose so-called reciprocal tariffs contributed to the plunge in crypto prices earlier this week. This after the president invoked a different authority to say he would impose 15% global tariffs, although only 10% tariffs have kicked in so far. The president, who's seen as pro-crypto, did not mention digital assets in his speech last night, did not mention crypto. Meanwhile, U.S. demand has been down across the crypto market, but now investors are seeing a rotation into altcoins, with more of them outstripping Bitcoin, according to the chief executive officer at ZeroStack, who also covers cryptos. Bitcoin trades, in his view, trades inside a broader market system now. So when liquidity tightens, volatility increases, he said, adding that assets like Solana that generate, in his words, real yield will hold up better than assets that were just moving on momentum. The whole industry mood remains cautious, though, as we've heard from Eleanor Terrett, who hopefully we'll get a chance to speak to today. Among other crypto folks, back on February 5th, Bitcoin tumbled some 13%. That was the most in nearly 4 years, and Bitcoin is down nearly 50% now from the all-time high of almost 127,000 that it hit early October last year. Investors should avoid reading too much into the recent gains after such a large drift lower, according to Jake Ostrovskis, who's the head of the over-the-counter trading at Wintermute, another crypto outlet, adding that until the token is back over 75,000, in his words, it's hard to see many taking it seriously. Nearly 9 billion, make that 9 million Bitcoin, 45% of all tokens in circulation, according to Bloomberg, are worth less than what holders paid for them, according to data that they've gathered from researcher Glassnode. And that helps explain why every rally is dying on arrival. Burned holders sell into any bounce, sapping upward momentum. We're watching what's happening with this CoinGecko. According to CoinGecko, the crypto market as a whole is also under pressure, with the total market value down more than 20% from 1 year ago. Continue to follow the cryptos closely, with Bitcoin right now off its high point of the day, right now hovering at around 68,314. Ethereum is down about 30 at 2,072, and Doge has regained its footing for the time being, right now at 10 cents. Shares of Salesforce moving higher today by more than $6 at $191.75. And let's finally bring up that NVIDIA quote here. We're following NVIDIA stock here. It did close the day. It did close the day higher by nearly $3 at $195.56 of $271 during regular hours. And it looks like NVIDIA has now turned slightly south in after-hours trading, down about 77 cents now at $194 and change. Taking a look at some of the other Mag 7 names, we see Tesla shares up more than $8 today at $417.40. Microsoft, which has seen a wild ride this year, up nearly $12 at $400.60 a share. Netflix, which I believe I mentioned earlier, let's bring that one up again, closed up nearly $5 today at $82.60. Tesla. Let's not forget about Tesla. It moved up more than $8 today at $417.40. Coming up, we'll have more on the action today on Wall Street and where the action was.
What would you do if your online store converted 36% more shoppers? You could take 36% more vacation.
Another pina colada?
Yes, please.
Open a new retail location with 36% more square feet.
Fantastic.
Hire 36% more help.
You're hired and you're hired.
Shopify has the world's best converting checkout, up to 36% better than other e-commerce platforms. What you do with those extra sales is up to you. Switch to Shopify today at shopify.com/listen and get a $1 trial. Shopify.com/listen.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
Dan Bongino returns,
It's real. You better produce something fast.
and he's not holding back.
Dan, that's backwards. No, I'm telling you the truth.
Hard truths and a bold perspective no one else can offer.
You may not hear this anywhere else. I'm always under the assumption that you're being played, we're being played. Man, this show continues to expand its footprint, and I love you guys for it.
It's the comeback everyone's been waiting for.
If there was ever a time, it is this one.
The Dan Bongino Show. Follow and listen on your favorite platform.
Moteka Money continues. 790 KBC is the crypto winter over. Bitcoin kissing 70,000 today. Ethereum is back above 2,000. And joining us live now is the awesome Eleanor Terrett, business journalist, crypto expert, and host of the Crypto in America podcast. Eleanor, thank you very much for coming to the line here this afternoon.
Thanks for having me, Frank. Good to see you again. How are you doing?
Fantastic. Great to have you with us. I know it's been a very busy day for you and a lot of action finally on the upside. It's a lot more fun when it goes up. Give us your reaction to this rebound we've seen this week.
That's right. I know. It's finally going up again. It's been a really rough week, really rough couple weeks, actually, for cryptocurrencies. I think a lot of people were concerned that there was going to be no end to that selling that we saw, Frank. I mean, we were down in the 50s now, but we're looking up, we're going up to the 70s as of today. And I think, some people who have been invested in these cryptocurrencies for some time are, very happy to be seeing the positive and the upside today. And, I think sometimes when you're invested in this stuff for the long term, it's easy to see past some of the selling, right? Some of these folks who have been invested for a while kind of are a little bit immune to some of these volatile swings. We've seen swings from 10 to 20 to 30% in some of these big market swings, but we are seeing the upside now, and I think it's not the all-time high that we saw in October. Bitcoin was up at 126,000, but it's a lot better than the 55,000 that we were seeing just a couple weeks ago. So it's on the way up, but also could go back down again, as we say on the show a lot, Frank. It goes up and it goes down, right?
That's right. And Michael Saylor certainly raised eyebrows when he tweeted recently that he thinks Bitcoin will either go to 0 or 1 million. How's that comment being taken in the crypto world, and what do you make of that?
Yeah, so Michael Saylor likes to talk his playbook, right? I mean, he is very heavily invested in Bitcoin, right? His company, MicroStrategy, is, they're very, very heavily invested in Bitcoin. And I think, people ask sometimes, is Michael Saylor's crypto predictions, are they for real? And, I think he would like to see Bitcoin go to 1 million. I think, probably his side of the deal on that one would be, he does not want to see this thing go to 0. He has lost, a lot of money in this market downturn. I think by recent predictions, I've seen him, down as much as, 8 to 9 billion in the hole in this market downturn. So, maybe some tongue in cheek there, but, he's definitely not as happy as he was maybe a couple months ago. But yeah, it's hard for MicroStrategy. It's actually one of the biggest shorted companies in this market as well. Maybe a little bit of tongue-in-cheek in that tweet as well.
Interesting. On your line with Eleanor Terrett, host of the Crypto in America podcast, covering the cryptos. And we see a MicroStrategy stock bounce today by more than $11 at $135 and change. And you're right, looks like he's sitting on tremendous unrealized losses. And the same with the Bitmine immersion stock. Thomas Lee, who's into Ethereum. That stock rebounded today by a couple of dollars at 21 and change. What about Ethereum in all this, back above $2,000 now?
Yep. You were seeing Ethereum do the same thing, bouncing back a little bit there too. The sentiment is higher right now, Frank. I mean, I think some of the optimism you're seeing is tied to some of the broader policy sentiment that we're seeing. I mean, you are seeing some, progress tied to the talks around the Clarity Act, which is that piece of legislation that is going through Congress right now. It's not passed yet, but there is, momentum towards hopefully seeing that piece of legislation, hopefully to the president's desk by April, maybe May. Some are saying by Memorial Day. No, actually, there's bets on this stuff on Polymarket. If you go on Polymarket and you go on Kalshi, and there's actually, there's markets being made on this stuff that says this stuff will be passed by April, by May. So it's very interesting, and I think people are getting, more confident that there will be legislation and rules of the road passed in the next couple months that will be, kind of solidify the stuff into law and give investors and companies sort of more, daylight when it comes to cryptocurrencies. So it really hasn't been in the past.
All right, terrific, Eleanor. Well, thank you very much for jumping on the line here on this big news today with the rebound in cryptos, with Bitcoin up around 70K and Ethereum getting close to 2,100 here at the moment. Eleanor Terrett, awesome business journalist, crypto expert, and host of the Crypto in America podcast. Eleanor, look forward to talking to you again soon. Thank you very much for taking the call here this afternoon.
Yep. Thanks, Frank. Talk soon.
Thank you very much. Motaco Money continues here, 790 KABC. Pretty decent rebound for the stock market today. During the State of the Union speech last night, the president defended his trade and tariff strategy, even after the Supreme Court ruled on Friday they had violated federal law by using emergency authority to impose global tariffs. The president has imposed a new 10% global tariff, which went into effect on Tuesday, despite saying over the weekend it would be 15% effective immediately. That remains to be seen. Let's discuss the fallout from the Supreme Court ruling and what's next for tariffs and the whole works now. Joining us live is Los Angeles-based economist Christopher Thornberg, principal at Beacon Economics. Christopher Thornberg, thank you very much for coming to the line here this afternoon.
Great to be with you, Frank.
Wonderful to have you with us. Big headlines every single day, it seems, but certainly give us your reaction here to what happened last week with that much-anticipated Supreme Court ruling against the president's tariffs.
Let me put it this way. Tariffs weren't that big of a deal for the economy in the first place. Ergo, getting rid of the tariffs is also not a big deal for the economy. People were vastly overstating the negative impact. And as a result of that, it's hard to say there's much of a positive impact. Now, by the way, I'm not for a second suggesting that tariffs are good policy. They're not. I am a normal economist. We do not like tariffs. That said, saying that you don't like tariffs is a lot different than saying tariffs were that big of a deal. Look, last year we collected about $180 billion in additional tariffs because of Trump's policies. By my analysis, about $40 billion of that was passed off to American consumers. $40 billion out of a spending base of $21 trillion. This was the proverbial drop in the proverbial bucket. And really, honestly, from my perspective, the bigger worry is not about tariffs or his next tariff effort, but rather the fact that the U.S. is going to be borrowing about $260 billion more next year than they would have otherwise.
On the You're Live with economist Christopher Thornberg, and what about the inflation aspect of all this? It's been widely talked about that tariffs are causing inflation, but the official numbers, what's the real on that, please?
That's completely false. I mean, look, goods prices were up about from 23 to end of 23 to 2024, we're up about 0.2%. From the end of 23 to the end of 23 to end of 24 to the end of 25, goods prices went up about 1.2%. So you could argue that there's only been a 1% increase in the pace of inflation for goods. Most inflation in the United States is being caused by services. It's healthcare. It's insurance costs. This is the source of inflation, not goods. So it's internal situations, not external. Now, be that as it may, look, overall inflation is relatively constrained. For the last 3 years, it's been running about 2.6%. That's just a little bit above Fed target. Honestly, inflation is not a problem in the United States, except for the fact that people think inflation is a problem in the United States.
See it tonight, read about it tomorrow, but hear it now on Motec on Money, live on the air with economist Christopher Thornberg, prominent local economist, principal at Beacon Economics. What about the price of gold and silver in all this? We're told that those are great inflation hedges and rise at a time of inflation. What do you make of those big, outsized, unusual moves recently?
Well, again, I think that that's more about expected inflation rather than current inflation, right? And on that front, people are probably right. Look, the biggest problem in the United States right now is something that economists have been talking about for a long time, but we have to appreciate how particularly profound it's become in recent years. And that, of course, has to do with the federal deficit and the federal debt. Right now, the U.S. has a 100% debt to GDP ratio. And that's an enormous pile of debt. Now, it's not costing us very much because the federal government over the last bunch of years has been able to borrow very, very cheaply because of the decline in interest rates. But that said, interest rates can't go down anymore. They simply can't. Now they have to start going back up again. And that, of course, is the real problem, because even a small increase in interest rates in the United States will cause an enormous increase in the carrying costs of all that federal debt. And that is exactly why people are afraid of inflation. Look, history is very clear on this. When governments have a problem with deficits, the obvious answer is to raise taxes and cut spending, but politically, that's really hard. So more often than not, when governments get into this situation, they monetize the debt, which is a fancy way of saying they print money to pay the bills, and that's exactly what leads to the kind of inflation, more long-term inflation, 1970s kind of inflation, and that's the reason that people are trying to jump into gold and silver now, with the idea that at some point when this fiscal crisis hits, we're going to be using quantitative easing in order to try and pay the bills in the short run.
Thank you for those tremendous insights. And getting back to the president's tariffs and now this 10% global tariff, does that change the equation in any way? And he's looking to raise it to 15%.
Well, he could talk about 10 to 15% global tariffs, as the case may be. But a couple things here. First of all, there's a lot of thought that this is also not legal on his part. And my guess is if someone sues and shoots him down, he's not going to get the, if you will, the temporary stay on that ruling. Rather, it'll probably be kick in. Regardless, remember that this 10 to 15% can only last 150 days. So it's not even half a year, even if he does get to put it in place. So it doesn't really change the calculus, as the case may be.
You mentioned something very significant. Seems like almost all economists were very much against tariffs, from Ben Stein right on down the line, right, when he gave that famous lecture, and he's a frequent guest on this show, by the way,
sure.
When he gave that lecture in Ferris Bueller's Day Off about the 1930s Smoot-Hawley tariffs and all that. But the president is sticking to his guns on the tariffs. He loves, well, we used to call her in this show, Ambassador Tarif tariffs, right?
Yeah. Uh-huh. Well, a couple of things here. First of all, yes, tariffs are a bad idea because they're distortionary. Guess what? Every tax is distortionary. There's not, and that's the key. The conversation we need to be having is this: A, we need a government. We need a government that can pay its bills. That means B, the government needs revenues. Now, there's lots of ways of getting that revenues. One is tariffs. Another one is income taxes. Another one is sales taxes. And economists can certainly debate which of these taxes has a smaller or larger distortionary effect on the economy. But here's the key. Whatever you want to think about tariffs, we are now going to have $250 billion less in revenue this year as a result of those tariffs going away, not to mention having to pay back a whole bunch of the $180 billion from last year. But of course, it seems impossible for me to imagine Congress figuring out a way of raising taxes to backfill that. In other words, people are saying, hey, it's great the tariffs are going away, less distortionary effect. But we have to offset that wonderful idea with the idea that a lot more borrowing creates all other potential distortions in our economy, things that people should be more worried about necessarily than the price of tires or sneakers.
All right, so all of a sudden, trade policy back very much in the discussion here, in the supply chain, and all the tariff talk is back for the time being. Given the Supreme Court ruling now and uncertainty over the latest tariffs, where's this going to lead?
Well, that's a good question. The one thing here we have to keep in mind is that we live in extremely, extremely intense political times. And there are some pretty common sense things that this nation needs to do. We need to fix our immigration system so more people can move here so we can have labor force growth. We need to fix our tax system to make it more fair and more level across different groups of people. We also need to raise the retirement age, and we need to cut a lot of the wasteful spending at the government. But none of this can take place when we're in the midst of these ferocious political battles over issues that really aren't that big of a deal. Our problem in the United States is that we've become so engrossed in our left versus right dogfight that we're completely ignoring the bigger picture. And therein lies, of course, the biggest danger of all. It isn't that the economy is all that broken. It's rather our ability to recognize and fix the simple problems that exist in our economy. That's the part that's broken.
Economist Christopher Thornberg, Principal Beacon Economics, based right here in Los Angeles. Chris, wish we had more time, and hopefully we can do this more often. Thank you very much for taking the call here this afternoon.
Pleasure to be with you, Frank, as always.
Yes, sir. Thank you.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!
The CJ Pearson Show.
Every week, we'll take on the biggest cultural, political, and moral battles in America head on.
CJ presents the most passionate voices in the Black community.
When you're going around and talking to people in actual communities, you get to know what people actually care about.
As a Black man, why can't I be the first one in my family to graduate from college? Why can't it be me? Shift the way that I think about the world.
Bold truth, real conviction, zero permission. This is the CJ Pearson Show.
The CJ Pearson Show. Follow and listen on your favorite platform.
Thank you very, very much. Motac Money continues here in 790 KBC. Big day today. Big gathering of the Los Angeles area business and civic leaders at the LAEDC Economic Forecast event, the 2026 annual economic forecast, marking more than 20 years now of delivering economic insights to the region. A lot of business and civic leaders use the forecast event to plan their whole year. And joining us live now is Stephen Cheung, the president and CEO of the Los Angeles County Economic Development Corporation, the LAEDC. Also, President and CEO of World Trade Center, Los Angeles. Stephen Cheung, thank you very much for taking the call here this afternoon.
Thanks for having me, Frank.
Take it from the top and tell us about the big event today, the forecast event. I see the theme this year was from disruption to direction. Tell us about what happened there today.
Yeah, we had a great gathering of, as you mentioned, business leaders, civic leaders around the entire region to really learn about what happened last year in 2025 and what to expect in 2026. So high level, what we saw was last year between the fires, the tariffs, the immigration raid, and the federal budget cuts, LA's economy should have done that a lot better. But because of those factors, we actually didn't add too many jobs. In fact, we only added about 9,800 jobs, which is about 0.0% growth. So one of the things we're hoping for is that this year will be a bit better. In 2026, what we're projecting is probably a 0.5% growth, and certain sectors are going to do better than others. But everything is also dependent on how the federal government's regulations and new policies might impact us.
See it tonight, read about it tomorrow, but hear it now on Motac on Money, live on the air with Stephen Cheung, the president and CEO of the LAEDC and World Trade Center Los Angeles. What about on the fire recovery front? Give us the big takeaways of the discussions on that today.
Well, there's so many different elements. We talked about construction costs. We talked about what exactly is it going to do to our small businesses that are located into the Palisades and the Eaton Fire region. What we found throughout the entire year is that there are over 6,000 companies located in the burn zones and also the surrounding evacuation zones. So looking at the economic impact, we're estimating that's going to be about $4.6 billion to $8.9 billion of economic impact directly stemming from the disruption to those businesses, which equates to about 25,000 to 49,000 jobs that will be impacted if the recovery process doesn't expedite and doesn't speed up.
Of course, now we're talking about trade again, given the Supreme Court ruling last week and tariff uncertainty once again. The president imposing the 10% tariffs that have kicked in. He's talking about 15% tariffs. Ultimately, what was the reaction to all that big news, and where do things go from here?
It's been really tough to basically see the fluctuation going tariffs, no tariffs, tariffs again. What we saw was last year, LABC produced a separate report on the trade and logistics sectors, looking at the economic impact for the entire industry, not only the Port of Los Angeles, Port of Long Beach, but also rail, trucks, and also distribution warehouse, all the sector combined together. That's about 900,000 jobs in Los Angeles County alone that are directly impacted. And so when you're looking at the greater Los Angeles region and the indirect and induced jobs, that's about 2 million jobs that are supported by this trade and logistics sector. So you can imagine anything that happens to the international trade would have significant impact on this particular sector and our entire economy as a whole. What we did see was that last year at the beginning, a lot of folks were trying to beat the tariffs. So they saw a drastic increase in terms of the volume coming through the Port of LA, Port of Long Beach. However, after August, that number's been steadily declining every single month. So even though we had a record year of 20 million TEUs being passed through the Port of Los Angeles, Port of Long Beach, when you look at it overall, you start seeing that decline that's now coming into this year.
On there live with Stephen Cheung, the head of the LAEDC and the World Trade Center Los Angeles, and big sporting events on the horizon here, including the Olympics coming up. It'll be here before you know it in 2028. Tell us about the expected economic impact and the preparations in the meantime for all that.
A lot of great discussions about it. We were talking not only from a tourism perspective, but the infrastructure perspective, including transportation and moving people around. So we know that economic impact is going to be great. We don't have the exact numbers yet, but we know that with FIFA World Cup, you're going to start being a test trial for a lot of these international visitors coming to Los Angeles. What we did see is over the last year and a decrease in international visitors coming not only to Los Angeles, but across the United States based on some of the federal policies and visa situation that's been happening around. So we're concerned to see how that's going to impact FIFA. Hopefully that will resolve itself. But after FIFA, don't forget, we also had the NBA All-Star Game already here in Los Angeles this year. Next year, we have the Super Bowl. And with the 2028 Olympic Games coming, we're seeing a lot of international interest in establishing their country houses. They're now starting to do more business exploration trips. So we're going to expect to see an international attention paid to the Los Angeles region. That's why we need to get our act together to make sure that we showcase to the rest of the world what LA is really about.
Yeah, big salute to the Dodgers. They also pumped up the economy over the last year too, right?
They certainly did. One of the things that we also track is the tourism number. For the listeners out there, I don't know whether they know this, but from 2023 to 2024, we saw a drastic increase in terms of a number of Japanese tourists coming to Los Angeles. That number rose from 2023 to 2024 by 91%. 91%. And additionally, about 85% of those visitors that came from Japan, they went to 2 or more Dodger games. So the Otani and the Yamamoto effect is happening, and it's really driving the economic development opportunities here for not only the Dodgers, but also for the local restaurants and the local shops as well.
That is so wonderful, and no one will ever forget that glorious moment when the World Series ended with that wonderful reaction there. So that's wonderful, and what an impact, as you just laid out for us here. What about the business of show business? Drama, of course, over the future of Warner Brothers, and a lot of discussion about Hollywood leaving Hollywood and all that, and a lot of disruption since the strikes occurred, and new concern about additional labor action here. What about showbiz?
Yeah, I think definitely this is an industry that we sometimes take for granted as the Los Angeles region. I think we need to pay special attention to it. The rest of the world, the rest of the United States are actively poaching the Hollywood industry from us, especially when it comes to production of film, television, and other productions as well. And this ecosystem has supported the industry and our economy so much that we sometimes forget how intricate it is. So what we're seeing right now is last year, the state of California, actually through the governor's office, have passed a $700 million tax and film and television tax credit incentive to help retain some of these jobs. That's going to do a little bit to help us stem from the hemorrhage that might be happening in this industry without that tax incentive. But we need to do a lot more to make sure that we're able to work with the local municipalities, work with the county to make sure that filming is going to be a welcomed and easier transaction so that we can retain the filming that's here. Because when the filming is here, you're also going to get ancillary supportive services, the makeup artists, the red carpet providers, the catering services. All of those small companies around Los Angeles will benefit from Hollywood being here in Los Angeles.
And just about 30 seconds left to your bottom line for us. How is economic growth and the job picture looking here in L.A. in 2026?
Well, there's certain sectors that we are still seeing projection to grow. Healthcare and education is going to continue to be the driving industries when it comes to job growth in the future. However, as we're seeing the federal cuts happening with Medicaid and Medicare, that might impact the number of jobs that will be available because some of the hospitals and the healthcare providers might be limited with their patients' access.
Stephen Cheung, thank you very much for taking the call today. That is Stephen Cheung, President and CEO of the LAEDC and World Trade Center Los Angeles, live with us here on Motech on Money on 790 KABC, Los Angeles.
The expectation and the norm is to win, and that is what we will be able to do here. I believe in the power of UCLA.
It's a new day for UCLA football with new head coach Bob Chesney taking charge, and we need you to be a part of it. The right man is at the helm in Westwood, and the time is now for you to put your support behind the Bruins. UCLA football is ready to win, and we can't wait to see you this fall. Visit UCLABruins.com/tickets for more info on how to secure your seats for the 2026 season. Go Bruins!